You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 11th day of September 2024. Yep, 9/11. Hard to imagine. It's been 23 years since the towers fell. We have a generation, possibly 2 generations, who were not alive when the towers fell. My son Gabriel was born a year after. He was born in 2002. So on this day, it would only seem appropriate that we recognize the 23rd anniversary of the 9/11 attacks. Of course, there will be memorials held across the country. New York City families will gather at the 9/11 Memorial Plaza and read aloud the names of the thousands of victims killed, followed by the annual Tribute in Light ceremony. That day was the deadliest terrorist attack in U.S. history. 2,977 people directly killed, 2,606 in the World Trade Center, 246 across 4 hijacked planes, and 125 at the Pentagon in Washington, D.C. The remains of roughly 40% of the victims have not yet been identified. Over 25,000 people were injured in the aftermath, many suffering long-term health consequences from toxic contaminants and trauma. The attacks caused protracted wars in Afghanistan and Iraq, which ended in 2021 and 2011 respectively. Roughly 15,000 U.S. troops and contractors were killed across post-9/11 missions, with estimates projecting a total combined cost exceeding $3 trillion, with interest on the debt used to finance operations reaching $6.5 trillion by 2050. There's 2 things to bring tears to your eyes. Let's just take a quick, brief moment of silence to remember those who were lost. We made a promise then, we'll keep it now. We will not forget. Now, every one of us remembers exactly where we were. Those of us that are old enough remember where we were when Kennedy was assassinated. We all remember when Trump was almost assassinated. And everyone remembers where they were on that cool September morning, clear blue skies. And no one knew what was happening. You know, the first plane that flew into the tower was an accident. So thought. So the next one hit. And then, well, I'll never forget that day. My wife and I, we sent all of our, first we gathered all 50 employees. We prayed together. And we sent them home to be with their families because we didn't know what was going to come next. No one did. My wife and I went home, put our little transistor radio in the front yard, and we spent the whole day painting our fence. And that night, George Bush delivered a very stirring speech. And I wasn't sure whether I should tell my employees to come into work the next day or not. George Bush ended his speech with, "Tomorrow, America goes back to work." Reminds us of a time when America had strong leadership. So Vice President Kamala Harris and former President Donald Trump went head-to-head in their first debate in Philadelphia last night. The ABC hosted event was the second presidential debate of the 2024 election season, but marked the first and only scheduled in-person encounter between the two presidential hopefuls following President Joe Biden's exit from the race. If you were able to watch it, I'm sure there's a lot of mixed emotions out there. The host, boy, they weren't biased, were they? Oh, fine job. The roughly 90-minute debate, moderated by David Muir and Lindsay Davis, featured back-and-forth exchanges on issues including the economy, abortion, immigration, and foreign policy. Trump and Harris also took jabs at each other. Trump criticized Harris for changing her stance on issues like fracking and joked he wanted to send her a "Make America Great Again" hat for her policy positions. While Harris commented on Trump's legal battles and criticized his rallies, the moderators appeared to only fact-check Trump. Imagine that. When he claimed immigrants were eating their neighbors' pets in Springfield, Ohio. Now, the town managers denied it's true, but the people whose pets are missing claim it's very much true. I suppose someday, in a perfect world, even an imperfect world, we'll actually know the truth. People come to our country from other places. They bring their customs with them. With 8 weeks until the election day, Harris is now ahead of Trump by roughly 1 percentage point. Next up is a CBS-hosted vice presidential debate between Minnesota Governor Tim Walz and Ohio Senator J.D. Vance, who will face off in New York City October 1st. I'm still stunned because it's all about we're fighting for democracy, we're fighting for the soul of the nation. But how democratic is it to only have debates on liberal networks? Yeah, I know they let Fox simulcast the event, but they didn't let Fox moderators ask the questions or moderate the debate. So, if you're okay with that, well, then You deserve what you get. That's all I can say. With 8 weeks until Election Day, Harris again is ahead of Trump now by roughly 1 percentage point. When Trump won the election 2 elections back, he was behind in the polls then. So I guess time will tell what actually happens. All right, let's get to our daily devotional, which is where we typically start every single day. But I wanted to take that moment to remember 9/11. And I know the debate's on everybody's minds. The internet's abuzz. Galatians 6, verses 9 through 10. So let's not allow ourselves to get fatigued doing good. At the right time, we will harvest a good crop if we don't give up or quit. Right now, therefore, every time we get the chance, let us work for the benefit of all, starting with the people closest to us in the community of faith. So today we're continuing with our devotional topic, God's dream for your life. Everyone should pray this. God, help me hold on and not give up. And that really holds true right now, this moment in time. Because I think things are going to get a lot worse before they get better. Or we're going to end up with a new normal that is nothing like what our forefathers envisioned. When you go through the delays in life, don't get discouraged. Now, we've talked about those delays the last couple days. Don't get discouraged. Don't lose heart. Don't give up. The Israelites did, and it kept them out of the promised land. Numbers 14:2 says, all the Israelites grumbled against Moses. If only we had died in Egypt. We should choose a leader and go back to Egypt. They gave up on their dream. They had been rescued after 400 years of slavery, but then wanted to go back because they were being delayed. Like the Israelites, some people would rather live in slavery than face the fear of freedom. They are not willing to push through and work on the problem until they get it right. They want to give up. They settle for mediocrity in life. I want to encourage you, don't settle for less than God's best for your life. If that means going through a tunnel of conflict, take the tunnel. In the middle of the tunnel, it will be dark and you will want to run back to the light. But you've got to keep going until you come out on the other side into the light. Instead of getting discouraged, be persistent and pray. As you read in Galatians 6:9, let us not become weary in doing good, for at the proper time we will reap a harvest if we do not give up. That is the law of the harvest. There's always a delay between sowing and reaping. Plant in one season, you reap in another. God wants to see if you're going to keep cultivating, planting, and sowing. If He sees consistency in your life, then the harvest will come. It will not come immediately because it proves nothing if He does it immediately. No character development or stretching of your faith takes place. Jesus said in Luke 18:1, you must always pray and never lose heart. Those are the two options you have in life. Pray continually, without ceasing, or lose heart. You'll always be doing one or the other. If you pray continually, you will not be discouraged. If you don't pray continually, you will lose heart. You will get discouraged by the problems you're facing in your life, whether it's at work or school or in your family, maybe even in your church. You gotta keep praying. What do you pray during the delay phases of life? Pray, help me hold on and not give up. God will hear you and He will help you. You're not alone. So you don't have to get discouraged, even when you're delayed. Join me in a word of prayer. Heavenly Father, first and foremost, we pray for all the families and each person that was affected by the great tragedy of 9/11. And Lord, we remember the somber words of Osama bin Laden, that the next time the attack would be much greater and that it would come from inside our nation, not outside. Lord, for the last 3.5 years, we've watched the troops assemble inside our borders, unfettered. We pray for our country. We pray for each American. We pray for what the future holds, because we know, God, that you hold the future in your hand. So strengthen us, Lord, to continue serving others, doing good to all, especially to those in the family of believers. Help us to persevere in kindness, love, and generosity, trusting that you are working through every act of goodness. Guide us each day to reflect your love and grace in all that we do. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And it's Wednesday. I already said that. 9/11. 23 years later. And on this day, starting in the U.S. with the cash markets, or the indices as they're called, the Dow is down 415 points, just over 1%. NASDAQ is up 33. S&P 500 down 29. And the Russell 2000 down 22, which is a little over 1%. And by the way, those are points, not ticks. In the commodity basket, crude oil got a little turnaround, up $1.44, trading 67.19 last. That's a gain of over almost 2.25%, or $1,400 and now $80 per contract traded. The price of crude moves $1. That's worth $1,000 per contract traded, and we're currently up $1.47. Gold is up $1.40, trading $25.44.50 last. Silver's up 36 cents, trading $28.98 last. That's a gain of just over 1.25%. In the Asian markets at the close, the Nikkei fell 539 points, 1.5%. The Shanghai dropped 22, And for the Shanghai, that's almost 1%. The Hang Seng fell 125 points. In the European markets at the close, FTSE down 12, the DAX up 64, the CAC down 10. Pretty quiet there. So we had a red day in Asia. It was a mixed day for the UK. And it's currently a mixed Radio Wednesday here in the US of A. We got one of the major indices in the green. That would be the NASDAQ. Seems to be losing steam, but we'll see. But the other three are solidly in the red. Of course, as futures traders, we like to see all four of the major indices the same color. Whether they're red or green, we don't care, because futures traders can trade in either direction at the drop of a hat if that's what the chart tells you to do. But on the days where you do have all four major indices the same color, that's often when you get better follow-through on your trades. SpaceX's Polaris Dawn mission successfully launched early yesterday morning from NASA's Kennedy Space Center in Florida. The mission aims to take its four-person civilian crew 870 miles above Earth, farther than any human has traveled since NASA's Apollo moon missions, and more than 3 times higher than the International Space Station. It's a long way. To the markets, U.S. stocks tumbled today as investors digested an inflation report that showed consumer price increases ticked lower during August. Your wallet felt that, right? Little page ripped from my life. I stood in Safeway the other day in front of the orange juice dairy case. And I know orange juice really isn't good for you. It's got so much sugar. And so if you're going to drink it, if you like it, you know, it should be in moderation, all things in moderation. But I stood there and I looked at the price of a gallon of orange juice. And not quite, but I almost had a little tear in the corner of my eye. Because I'm thinking about how many families out there, I mean, when you were growing up, what did you have for breakfast? Bacon, eggs, orange juice, milk. How many families out there now can't afford those luxuries? But yet we have data heading into election that said consumer prices are down. Wow. Investors had been looking to August Consumer Price Index to lift the uncertainty around the size of the Federal Reserve's first interest rate cut in years. The data showed headline inflation slipping to more than a 3-year low. But core prices, which strip out the more volatile cost of bacon and milk and eggs and orange juice and gasoline, because none of us use those, well, they're stripped out. After a mixed monthly jobs report, the price data was expected to help settle the debate of whether to expect a 0.5 percentage point or a 1/4 percentage point when the Fed makes their decision on the 18th. And after the hotter than expected month-over-month increase for core inflation, traders are now favoring a smaller cut from the Fed at its meeting next week. The the odds of the Fed lowering rates by 50 basis points now sits at just 15%, down from the 44% chance seen a week prior per the CME FedWatch tool. Potential port strikes. Retailers and manufacturers are seeking to mitigate a potentially multi-billion-dollar deal if members of the International Longshoremen's Association go on strike October 1st at 13 of the nation's major East Coast and Gulf Coast ports. Now, if that happens, what do you think that's going to do for that gallon of orange juice or quart or whatever you can afford? Billions of dollars worth of imported goods, from cars and light rail trucks to electronics to food, clothing, jewelry, and agricultural products, come into the U.S. through these East Coast and Gulf Coast ports. Apple picked the low-hanging fruit. Apple's unveiling of the iPhone 16 Monday shows the company is sticking to the basics when it comes to new product launches, rather than diving headfirst into the AI horse race. The company is shooting its AI shot carefully, slowly, and deliberately, lest its AI-dubbed Apple Intelligence makes a bad first impression and poisons the AI well. But read another way, Monday's presentation showed a company unwilling to rush tech it hasn't found the right use for, other than spying on you. And in the meantime is doubling down on its marketing and user experience prowess, making the banal suddenly seem compelling. And this is from the Wall Street Journal. Inflation extends cooling streak to hit 2.5% in August. Now, that's from the Wall Street Journal. Okay, this is from Reuters, and I believe this. U.S. utilities faced a near 70% jump in cyber attacks this year over the same period in 2023, according to data from Checkpoint Research, underlining the escalating threat to our very critical infrastructure. When you turn on the faucet, you expect water to come out. When you flip the light switch, you expect the room to light up, right? When you hit the power button on your computer, you expect to hear it come to life. But every day is a battle just to keep our utilities on. Money that could be spent in so many better ways than having to fight these hackers who are relentless around the clock. There's so many bad actors from so many countries. And their one goal in life, their job, they get up every day to go and try and destroy America's utility grid. Even on a personal level, how many times a day do you get an email that you know is not legitimate? Or even now a text message. Oh, you owe this amount of money and we're about to enforce collections and you need to click this link to straighten it out. And then when you click the link, either one, based on whatever kind of phone you get or on your computer, if you click it there, you get infected with some kind of malware or virus. But then if you follow through, because it looks so legitimate, pretty soon you're handing over your full name, your birth date, your social security number, your bank account number, because, I mean, you know that you didn't make that $1,382 purchase at Dick's Sporting Goods. But according to what this website's telling you, that without this information, they can't verify that you didn't actually make the purchase. And they really prey on senior citizens. There's a podcast I want to share with you guys about what a tough time senior citizens have. I mean, they're trying to navigate this new digital world in which we live. And, I admit, even my wife, she comes to me probably once a day. Hey, honey, would you look at this email? Would you look at this text? And I just go scam. And she goes, but how do you know? And I show her, and she's learning. And at least now we're at a point where if it's even slightly suspicious, she will come to me first before clicking anything. So I'm thankful for that. So what's next in the metaverse? Eric Collier, CEO of Vadim, is the creator of the first smart NFT and the founder of over 15 companies. Collier has raised over $1 billion for companies he has founded or co-founded. He's achieved various liquidity events, including acquisitions, IPOs, ICOs, and mergers. His current venture is ERC-741 on Ethereum, the first non-fungible token. Yeah, I know. Confusing. The first non-fungible token. He reckons people will become increasingly annoyed by airdrops, just as they are with spam in their email boxes today. The difference with airdrops is that they could be actual value, but that rare case is not enough to overcome the issue of being perceived as a nuisance. Also, bad actors can drop inappropriate content and other unwanted materials into someone's wallet without their consent. Rather than airdrops, a better concept is to make it known that gifts are available to those who choose to pick them up, and to use emerging formats like the non-fungible, fungible token that attach novel content to tokens only for those who choose to proactively review their bounty. In this way, value can be provided in a welcomed manner. Airdrops are very controversial. For one, receiving free money is great. However, the use of airdrops needs to be more focused on rewarding individuals who actually contribute to the growth of the project. Currently, over the past years, there have been many airdrops which have been abused via Sybil attacks, allowing individuals to create many accounts and be disproportionately rewarded by the token having an airdrop. The rise of airdrops plays a key role in fostering user engagement and building digital communities. Airdrops, where tokens are distributed for free or as a reward, create an immediate sense of value and ownership. They serve as a powerful tool for platforms to incentivize participation, reward loyalty, and invite users into the ecosystem, giving them a stake in the platform's growth. It's being abused. And while we're on the topic of crypto, India leads in crypto adoption for the second straight year. And there's a whole lot of people in India. All right, let's go to Logic 247. That's our 24/7 around-the-clock E-mini alert service. Not just E-minis, but crude and gold and silver and euro and bonds. The Logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Their day session is our night session, and vice versa. Valerie did this recap this morning at 6:30 a.m. Eastern. She will update it this afternoon, roughly around 5 p.m. Eastern, and then maybe again tonight around 8 p.m. Eastern. At the time she did the recap. Now we're in week 319 of Logic 247. And this morning I published, we broke 17,800. So over the last 319 weeks, we've issued over 17,800 individual handcrafted alerts. At the time Valerie did the recap, 6:30 a.m. Eastern, we had issued a total of 34 alerts so far this week, but there have been additional since then. We were still waiting on the outcome of 8. That gave us 26 actionable alerts, of which 3 or 12% would have been stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, Monday, we were sitting at 25%. Yesterday, we dropped to 20%. And today, we've dropped to 12% of actionable alerts being stopped out so far this week. Now, over the last 319 weeks and over 17,800 alerts, we've averaged on a weekly basis 20% or less of the alerts being stopped out. Again, based on market structure and that simple process we teach all of our passport holders. Each logic alert has an entry price, long or short, then an initial target that's designed to be enough to get your goal for the day, and then additional targets, and then a final trade to target. The purpose of the alerts is not for you to just trade them so you don't have to learn how to trade. Some people make that mistake, and it is a mistake because at the end of the day, you haven't learned how to trade. The purpose of the logic alerts is to help you learn how to read the chart. Because before you can learn to trade, you got to be able to read the chart. And when you're reading a financial chart, whether it's stocks, futures, crypto, Forex, ETFs, there's no words, there's no sentences, there's no paragraphs. There's this thing called price flow. So you got to understand how price flows. You got to understand where to expect support, where to expect resistance. You got to be able to recognize a window of opportunity when it presents itself. So use them as they're intended, and they will be one of the best teaching tools you'll have access to. Now, 319 weeks is a very long time, but before we had Logic 247, we had the concierge trade alerts. They're a little bit different. They don't come out around the clock. They're posted as a static report shortly after the Globex open each evening. So last night, the Wednesday session started at 6 p.m. Eastern. Just like tonight at 6 p.m. Eastern will be the beginning of the Thursday session. So last night at 7:15 p.m. Eastern, all of our members and trial members had all of these targets: ES, Dow, Russell, crude, NQ, gold, silver, bonds, euro. Now, instructions on how to utilize the CTAs are published along with the numbers each night. So if you're a member, You can read them. If you're on the trial, you can read them. And then if you have any questions, all you have to do is ask. Okay? All right. Now, all alerts are created on a 30-minute chart. Why 30 minutes? There's nothing magical about 30 minutes. However, it is the time frame I chose many years ago. And if it's not broke, it's probably best to leave it alone. And it served us quite well. But before we go to the 30-minute chart, we're going to take a quick look here at the daily chart. We had a leg to the downside. We got the bearish cross yesterday. We found support right here on this candle, right at the 38% fib extension. Now, remember, Monday was an inside day of Friday. Tuesday was an inside day of Friday. And now Wednesday is an inside day of Friday. So, based off what happened Friday, we've got 3 consecutive inside days so far. Now, today we did just barely take out yesterday's high, but we didn't take out Friday's high. And we almost took out yesterday's low. Oh, we did take out yesterday's low. Yesterday's low was the 38. But we almost took out Monday's low, but not quite. Today's low, 54.12. Monday, 54.05 and a quarter. So right now, price is trapped. Okay. We've got red and falling overhead, just potential resistance. We've spiked it. The step line is getting directly beneath price. When it does that, it becomes potential support. So where we close today will obviously be important, as it is every day. Keep in mind, we had a red candle all the way down, and now got this long wick. So price was really rejected after it made its run down. Obstacles overhead, once we clear red and falling, we've got the BBC, and we got a bearish cross right there. Okay, now that bearish cross, here's the 24% fib retracement. Right here. Okay, that's just above the bearish cross. So you've got the BBC as resistance, then you got the bearish cross, then the 24% fib retracement, then the 24% fib extension, right there. And if we overcame that, then we would be looking at the 38% fib extension as resistance. Now you're thinking, I don't trade a daily chart. Fair enough. But institutional traders do. And they're the ones who move price because of their account size and the size they trade in. Their trades move price. You and I serve as liquidity. If you'll make it a part of your daily plan to spend just 2 minutes with the daily chart of whatever you're about to trade, whether it's a futures market, individual stocks, crypto, Forex, ETF, you have the ability to literally look over the shoulder of the deep pockets that move price and see what they're doing. Institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size and the size that they trade in. It helps you identify major areas of resistance. Like if price were to suddenly shoot up You wouldn't know on your range chart or your 30-minute chart that the daily BBC is sitting right overhead, okay? And depending on the time frame you're on, you probably wouldn't know where the low of Monday is, or Friday, which has held this area right here. This low is 53.94, and it's held as it's been supported. It hasn't even been tested. We've just had some wide-ranging consolidation for 3 days. So try it. Try taking in what the daily chart offers you. Look over the shoulder of the deep pockets. See what they're up to. They were selling earlier, then they stopped. Buyers came in and drove us back to where we are. Now, will this turn out to be a head fake? I don't know. I don't have crystal balls. But we will know by the end of the session based on where the market closes. Obviously, if we get below the step line, then the next support level is going to be at the 38% fib retracement, and then at the low of today, 54.12. So you can learn a lot by studying daily chart, but you got to make it a part of your daily plan so that you actually learn. Okay, here's the 30-minute chart of the ES. Again, that's where all alerts are created. These are this week's weekly trading zones, which were published Monday morning at 6:15 a.m. Eastern. Once the weekly zones are published, they're carved in stone for the entire week. They don't change in any way whatsoever. So we can see on Monday we found resistance at the zone, and then we retraced. Resistance will always send the market looking for support. The pullback to the BBC holds more often than not. Green line, that's the BBC, stands for bull bear cross. Price crosses above it, we're bullish, expecting higher prices. When price crosses below it, we're bearish, expecting lower prices. On the 30-minute chart, we're now above the BBC, but we've run into resistance where at the weekly trading zone that was published Monday morning at 6:15 a.m. Eastern. So price struggled there yesterday and finally managed to clear it by a little bit. And then came the drop. Price got below the BBC, and this is where we put in our low. Right there. Support sends the market looking for resistance. So we had a high, a slightly higher high, a slightly higher high, and then, wait, what do we got for a high here? 5507.5. Yep, got a new high by 1.5 points. Okay, that's a sign of weakness. When we put in this slightly higher high here, look what happened. Here, look what happened. Here, look what happened. This is where the market opened last night. Price had blue and climbing overhead. Once blue and climbing gets directly above price, that becomes potential resistance because it's probably on its way to turning into red and falling, which is bearish. And so, down we go. Right to short target. See this right here? That's this. Support sends us to resistance, back to support, and back to resistance, where again we put in a higher high by was it 1 point or 1.5 points? 1.5 points. Yeah, that's a little bit, and we're always suspicious of just a little bit. And so down we go. We spiked the zone here. Well, initially, we came down and hit the zone, did the bounce, got the lower high. But on the way to that, we spiked all the way down. That was 8:30. I don't think we had any yeah, we did have some econ news this morning. We just talked about it. So that sent us down, and we recovered. And then along came 9:30. Now, this was the first opportunity that stock traders in the U.S. had a chance to react to what they took from the debate. Even if they say Kamala won, if that's their thinking also tells them that's really bad for the economy going forward. So, as that sunk in, down goes price. And we end up with a low just above this low right here. Okay. Buyers boldly came in off that support and drove us. Now, this was an unusual experience here. Now, on a smaller than 30-minute chart, it may look different, but on a 30-minute chart, it looks like we sliced right through that previous bullish cross. That's pretty unusual, but it happens. That's the truth about trading. So buyers came in, bid us up, got us above the BBC, and now we've run into resistance at the weekly zone. When price drops to a zone, we look for support. When price rallies up to a zone, we look for resistance until proven otherwise. On the Dow, here's where we opened, just below the weekly zone. Goes sideways at the BBC. Got blue and climbing overhead, turning to red and falling. Step line gets below the BBC, and there we go, right to the target. Go for the day. This candle opened at 7:43 and dropped to 6:53. But if you were just trading it to the target, 750 to 665, is that 85 points? You only need 20 points to get your goal for the day. Then we got below the target, and we ran into, see right there, where the step line crossed red and falling. See that low? Pushes up to the BBC, resistance, back down to support. Basically, a double bottom right there. Support sends us back to the BBC resistance. And then again, Wall Street opened, and traders had their first chance to voice their opinion on what they took from the debate. And the bottom sort of fell out. But where did it find support? At the weekly zone that was published Monday morning at 6:15 a.m. Eastern. That bounce has now taken us all the way up to the zone that was published Monday morning at 6:15 a.m. Eastern. So we've gone from zone to zone all the way back to the zone. So what happens here, very important, but because of the way it unfolded, on the way to that, coming down the short target support, on the way up, as you can see, it's quite often resistance. You've also got a bearish cross right here. So if we trade above that zone and start heading back up towards the highs of the session, keep in mind the areas of resistance that have to be overcome in order for price to get to the next zone overhead. Price is always trying to get to a weekly trading zone. From the moment the market's open, Sunday night till they close Friday afternoon, if price is below the 30-minute BBC, it's trying to get to the zone below. If it's above the 30-minute BBC, it's trying to get to the zone above. Below, there you go. Once, twice, then all the way down to the next zone. Now, Michael should be here by now, but maybe he's having trouble logging in. Let me see if he's tried to message me. No, not yet. Okay, on the Russell. Here's where we opened last night. Got that balloon climbing overhead. We're just kind of moving sideways. We get below the BBC. We drop to the short target. We spike it a little bit to this right here. You see where the step line crossed red and falling? That's that low. Support gives us a bounce. Sellers are not done. And that brings us down to this low right here. Support sends us to resistance at the BBC. So we get a leg, a retracement, and a leg that takes us up to the weekly trading zone, basically to the tick. Zone's 2105/2106, so we missed it by 3 ticks. Yesterday, price tried to push through, and today, as it tried to push through, we got the econ news, then we got the Wall Street open, took us all the way down to this zone. We spiked it a little bit, we've reversed, we've gotten above the BBC, okay? And so now, look for resistance, right here, 2096. We can get above 2096, say 2098, and you should have a clear shot right up to the zone overhead. If price fails here, if this turns out to be a head fake, then look for a leg back down to the zone. Keeping in mind, you'll have obstacles on the way, the step line, and red and falling. Michael, are you there? Michael. On the NQ, here's where we open. Same scenario, red and falling overhead. Come down to the zone where we consolidate. That's what happens when price hits a weekly zone. 70% of the time, you're going to get consolidation. Like this, like this. 20% of the time, you'll get rejection. 10% of the time, the slice. This is not how a slice typically unfolds, but it's how it unfolded today. So support sent us looking for resistance, which we found at the long target. Then we got the Wall Street open, which took us all the way down to the weekly trading zone, published Monday morning at 6:15 a.m. Eastern. Support sends the market looking for resistance. Now we took out the high of the session by how much? Just a little bit. So look for a retracement. Probably back to the BBC. And with this double top going on here, then, are you here, Michael?
Yes, I am.
Okay. All right.
Finally. Sorry.
And as you can see, guys, the low on crude was at the zone. And we'll go over the whole thing when I come back. Right now, Michael's going to give us a recap of what happened in the live training room. Then we'll do some live trading on TradingView. And then I'll come back, finish that recap, and close out with our good word for the day.
Wow. All right. Sorry, I was running late. Man.
No worries.
It's just weird.
Looks good.
Okay. All right. Good. There we go. Let me get rid of that and go here. Here we are. All right. Good afternoon, everyone. Today is Wednesday, the 11th day of September, 2024. Now, if you have not taken a free trial with us and you want to, then all you need to do is go here to mytradingiq.com, click on this purple button right here. When you click the purple button, there's no credit card required to take the trial. Right? Click on the purple button. It's going to bring you to this registration page where all we ask for is your name, your email, your phone number. There are 5 multiple choice questions. Just fill those out honestly, please. Down here, if you have a Ninja Trader, give us your machine ID, not your Ninja ID, Ninja machine ID. If you have TradingView, give us your login ID. If you don't have TradingView, you should really get TradingView. Take the trial. You get a 30-day free trial with TradingView. If you're going to trade in futures, you need to also get futures data. That is $7 a month, right? They give you delayed data, but if you're gonna trade futures and you can take the trial, you might as well pay the $7 that it costs to get a month's worth of delayed and month's worth of real-time data. Click the register button. When you do that, we'll be notified that you did it all, and then we'll be able to set you up, get your indicators indicating, so you can get started right away. All right, so we had a really good morning this morning. Our last 2 trades were stop outs, but other than that, we are having a really good morning. If you can read the spreadsheet, you can read all the CPC risk disclosures down at the bottom. Today, as I said, is the 11th day of September 2024. We're up 99 ticks on the NQ, 127 ticks on the Russell, 30 ticks on the YM, and 55 ticks on the ES. That puts us at $1,967 a contract, our best day of the year. Today took 3 minutes and 1 trade to get to the goal for the day. At that point, we're up $900, and we took a total of 28 trades this morning. So, on the month, we are at $8,062.50 over 7 business days, averaging $1,151 per day. On the year, we're at $77,862 per contract per 2-hour business day. So, 470 business days, averaging $458 per morning session. Right? Now, if you were to quit trading when you get the goal for the day, and you were to add 1 contract per month so far this year, you'd have only had to work 51.56 hours, so just over 51.5 hours, and you would have averaged $2,185 per hour, right? That is how today went, and that's how the month is going and the year is going, so it's been great. Everything's good. It's all good. Now let's get in there and see the actual trades that happened. The markets have just been on a tear. I haven't even looked at the larger time frame stuff today. But if I do go out here and I look at the larger time frame stuff, this was kind of from yesterday, but if I go out here and look at the larger time frame stuff, we had this big move down in the pre-market. And down here we hit a bottom and we're doing like 100% retracement. This morning when it was going down, I was wondering if we're going to do a 50% retracement right in here, if it was going to stop here at 50%. Or if we can do 100%, and then it just went right through the 100% retracement. And now you can see it's moving all the way back up, doing another 100% retracement. It's looking like anyway. It's crazy. Look, this is the ES. The ES is doing it. The Russell's doing it. This is the YM. If you look at it on the bigger picture here, the NQ has already done the 100% retracement to move all the way down, the end all the way back up. And YM already done it. Well, it's doing it. Now, I was saying this morning, I think it was just yesterday, I was looking at leaps on ETFs, and I was thinking, we need a day where the market really gets destroyed or really has a huge run, and then you just go and look at the other direction for a year from now, because there's going to be a ton of volatility in the market. So as we go through the next year, I don't know why the markets are the way they are right now. I don't think the news that we had come out today wasn't good news at all. Anyway, that's it. So I guess we can get into trades now. I should take the free trial, right? If you have not taken a free trial with us, go out here to mytradingiq.com, click on the purple button. No credit cards required for the trial. Click on it there. We've gone through the results. We've gone through the trades. Right. So now I did go through the trades, right? Did I not go through the trades? What time is it? 104. All the individual trades. I don't think we did go through all we didn't go through all the individual trades. The trades that we took here on the YM. Our first trade on the YM, we were plus 20. And then we had another 10 tick trade to get us to plus 30. And we had a 45 tick trade to get us to plus 75. Then I stopped out, minus 25. That got us back down to 50. And then here, I had another 5-tick trade, get us to 55. Then a break even. Then I messed this one up right here. I stopped out again, put us down to 30. And that's where we ended up for the NQ. I'm for the NQ for the YM this morning. Okay. You can see during the break here, there were a ton of trades. And all you're looking for is for the ribbon to be spread and your commodity oversold. All right. Ribbon to be spread. I mean, in this case, because we're in an uptrend, the ribbon to be spread and your commodity oversold. You have to have a higher swing after each one. Okay, so there's this one right here that did not put in a higher swing, so you wouldn't be looking at anything until you get all the way over here. You get another one right there, another one right there, another one right there. Those are just awesome trades all through there. Okay, that was the YM this morning. The Russell this morning, we're up 127 ticks on the Russell this morning. 127 ticks. We had some really big trades, and pretty much all the markets, I think we had a really big trade. But on the Russell, we started off right here on this one, 3 ticks. And then I messed this one up here. I had a 16 tick stop out on that, and I messed that one up. I should have been on a break even on it. And I bumped my stop to just minus 16 ticks, and I got a minus 16 on that. If I would have left it alone, it would have been okay. But I had messed it up, and I decided to reduce my risk. So got a minus 16 on that. We're at minus 13 after the end of that. And right here, we got a plus 40, I think. Plus 30. No, plus 40. We got a plus 40. We ended up with 22. So whatever that is, 35. Yeah, plus 35. And I missed the follow-up trade right there. Then there was another one right here. We went from 22 up to 67. So we had a 45 tick trade right there. And then I missed this right here. And the next one we went from 67 to 87. So I had a 20 tick trade there. And then I went from 87 to 127. So I had a 40 tick trade right here. And I believe that is where we stopped trading. It is where we stopped trading now. Right here after this huge move down, you had to put in a higher swing before you could trade again. So right here was your next trade. All right, that eventually put in a higher swing. The next trade you could take was right here. Eventually put in a higher swing, and that's where you are right now. That was the Russell. So we had a bunch of trades with the Russell. We did really well with the Russell today. And this last trade that just triggered right back here is still going. The ES had some really good trades on the ES today too. Look at it, it's still going and going and going and going. Let's go all the way back here now. All the way back here. All right, so here was our ES. Our first trade on the ES was right here. We had a plus 8. The next one's right here. We had another 8. It goes to 16. Then we had a plus 12. Got us to 28. Then we had a break even. We had a big trade right here. We're from 28 up to 53, whatever that is. 25, 30, 28. It's 35 ticks right there, I think, something like that. And then we went from 53 up to 65, so we had 12 ticks there. And then we had a break even, and we didn't do anything for a while, a break even, and finally we stopped out here. We went from 65 down to 55. This was right at the end of the session. We stopped out right there. And then, let's see, right in here, there was a nice long trade right there. Went right through the weekly trading zone. Another one right here on the other side of it would have been a break even for me if I had tried to do it. Another one right here, nice trade right there. One right here, that would have been a break even for me if I had done it. Then it changed directions and it tried to give a short right here that would have stopped out. Long right here, that would have stopped out to the tick. Right. Then I put in a higher swing. And through here, you didn't have a trade in here. It got all sideways and crooked in there. You see how the ribbon was flattened out in there. We get question box. I don't think anybody's asked any questions, but no. Okay. But it got all flattened out in here. And then right here, there was no long trade right there. That ran just a little bit. It did put in a higher swing, but it didn't give you another trade set up. Through here, it's questionable in here if you could see all 4 lines in the ribbon. If you did and you took that trade, it gave you a good 8 to 10 ticks in profit. You had to wait for the higher swing before you take another one. There was nothing you could do all through there until you get all the way over here. And there was a long trade right here. And just recently, a long trade right there. Wow. So there were a ton of trades today. A ton of trades. The market was really volatile and just gave up a ton of opportunity. So, does anybody have any questions about it? All right, it's 1:10. So I'm just going to get in here and trade what we can trade right now for the rest of the session. If you're just jumping in here and you're on YouTube and just coming in, to take a free trial, go here to mytradingiq.com, click on the purple button. You click that purple button. There's no credit card required for the trial. Click that purple button. It's going to bring you to this page. On this page, all we ask for is your first name, your last name, your email, your phone number. There are 5 multiple choice questions. Answer those, and down here, if you have Ninja Trader, give us your Ninja Machine ID, not your Ninja ID, your Ninja Machine ID. If you have TradingView, give us a TradingView login ID. All right. We need to enable the indicators to get them indicating on your desktop. Okay. To enable the indicators, get them indicating on your desktop. We need that information. All right. All right, so we have a long trade. We had a long trade right there. This needs to put in a higher swing. This is one that I was just telling you about a minute ago on this. It needs to put in a higher swing there. This over here needs to put in a higher swing. This just did on the Russell, so that needs to pull back. And the YM also just did. So the YM long trade was from right there. The Russell hadn't had a long trade since back here. Okay, back here, but it's still going. We did just get a higher swing here on the ES. We need a pullback, and we need to get a higher swing here on the NQ. I didn't get to the NQ portion of this, I don't think. I'm just going through everything. But on the NQ, there were a bunch of trades on the NQ too. We ended up with 99 ticks on the NQ. Sorry, I feel like I'm missing things today, at least for now. Alt in this way. There's a whole bunch of bars, but now surprisingly, we did better on the roll than we did on the NQ, but we did stop out on our very last trade on the, well, actually we got to break even on the very last trade on the NQ. Started out with a stop out here on the NQ, we're minus 36. Then we had a break even and a break even and a break even. And then finally we had a plus 48 right there. That got us to 12. Another 48 there, that got us to 60. And then a break even. And I did something, I messed something up here. I got there, we went from 60 to, I think we went 60 to 108, so I had another 48, and then I messed a trade up somewhere in here and I lost 4 ticks on it. Got me down to 104, and then I had a break even and a small win there, got me back up to 108, break even, then a stop out there. Stop out there. Is that the last one? Yeah, that was the last one. So there was something else where I went from 108 up to 135, and then this last stop out here got me down to 99. I'm missing a trade in here somewhere, 148 tick win somewhere in there. But we ended with the break even right here this morning. Okay, I guess I missed saying all that stuff. All right, so now where we stand at the moment, we just put in a higher swing there. We have a higher swing there and a higher swing there and a higher swing here. We need pullbacks on everything. The ES is almost down into the oversold right here. Not quite there now. It is in the oversold. So on the ES right now, what we would be doing is looking for an up close. There's going to be 2 points above the bottom of the bar. The bottom of the bar is right here, 50.50. So we're looking at 52.50, 55.0250, just like that, I believe. Just like that. Now my stop should be 10 ticks away. That is 10 ticks right there. We came out of the oversold. The ribbon is spread bullish. I'm pretty sure. Yeah, I'm off by 3 ticks on the entry. It should still run up through this level right here. I should get all the way up to there right now. Okay, the pullback number is right here. Now, if I had gotten in at the right place, I'd have probably had my stop and break even already, but it should run up and get up through the prior swing high right here. Okay, that prior swing high is at 5.5. This is the number that Don was showing. It looks like it's going to stop me out. Those 3 ticks that I messed up right there are going to cost me. We'll see. We'll see if they do or don't. But this is the trade right there on the ES. It's right there. We need 4 ticks in profit to bump that stop to break even. I'm going to get rid of this target. That's what it should get up to right now. It should get up to that number, but I don't know if it's going to. The NQ also has a trade over here. Sorry. And the NQ, I'm going to throw to break even right now. Okay, and I'm out of break even on the NQ. We didn't have a trade here. We didn't have a trade here, but the NQ came out of the oversold right there. That was a trade there on the NQ. All right, so we ended up with a break even on that, and we just stopped on the ES. And once again, on the ES, if I'd had my stop and I may enter at the right point, we would have had it a break even, I think, on that. But that's okay. All right. Let me slide that over and this over. This and this and this. So we ended up with a stop out there and a break even over there. That's business. Okay, over here on the YM right now, we've got a low right here at 606. We'll be looking at 626 to buy on that. Okay. That's what we'll be looking at there. It's oversold. The ribbon is spread. We just need to come out of the oversold right now. Out of the oversold, and we'll have a trade. The Russell, we need a pullback. The Russell looks like it's headed to this weekly trading zone up above right here, and we need a pullback on that. Okay. All right, it doesn't look like we're going to get it here right now on the way. I'm going to cancel that for right now, but I think we're going to get another trade opportunity here. We now have 602, get to 622 right there. All right, and on the Russell, we need that to pull back down. We need that to pull back down here. Get into the oversold. It doesn't have to touch the ribbon. All right, touching the ribbon isn't what we're looking for here. We just need to get into the oversold and keep the ribbon showing a trend. Okay. Wow. So low here of 96. 96 up to 16 like that. Now it looks like it's going all the way down to test the ribbon right here, but let's see where it goes. It's going to be 14. 20 ticks above the bottom of the bar is what I'm looking for. 20 ticks above the bottom of the bar. All right, this is why we use range bars, because you know exactly where the bar is going to close ahead of time. Okay, so we're waiting right now. I want to do something else. Let me just hit this. All right, so right here, we're waiting for the YM to give us enough close. On the bottom of the bar was right here at 91. So we had to buy a stop limit over there at 611, 20 ticks above the bottom of the bar. And these are 19 tick range bars. The reason we use range bars is because you know ahead of time where the bar is going to close. You know what the bottom is, you know what the top's going to be. So we were able to put our order on and have it waiting there at 611. We did get one tick of slip in this. And we have a 25 tick stop on this YM trade right here. And we're anticipating that it's going to get up above the prior swing high here at 643. Right? That's what we're anticipating. 643 is what we're thinking. It's going to go up above the prior swing high. This morning, excuse me. All right. It looks like it might just pull all the way back down to the ribbon. And if it does, it'll stop us out. If it pulls all the way back down and bounces off the ribbon, it'll be a stop out to the tick, possibly. But if it does, it does. This morning, one of the things we were looking at was this right here. Down to there and over to here. All right, now this is, if you take the diamond principle that I was talking about a couple of weeks ago, and just break it down using a triangle like this. What you anticipate, once we start moving up from here, what you anticipate is that this is going to repeat itself. Okay. I'm going to repeat itself to get back up to here, but repeat itself again after that. That's what you anticipate. Okay, so if I were to clone this, I were to copy this, do this one. I just stopped out on that land trade. But I want to show you this, even though I stopped out. I want to show you this. If you were to copy that and reverse it, you have this. That would be the square principle, right? Now I use the diamond principle. Because with the diamond principle, you're going to take this and, come on, I will get this. I will be able to do this. There we go. Let's put it up here, but reverse it. Okay, that's what you expect out of the trade. Now this is extended a little further than we thought it was going to, so now it's gone down to here and over to here. So this would extend further now too, right? Like that, something like that. You see what I mean? Does that make sense? Gonna remove those right now. We did just stop out on that YM trade. Let me get my DOM back up. Make sure that I didn't have anything else left on there. There it is, right here. Okay. All right, so right now, the Russell looks like it's gonna give us a long trade. We have a low here of 94.8. If you add 20 to that, it'd be 96.8 is what we'd be looking at. The up close there on the Russell. Now, are these just pullbacks in the bigger uptrend? Well, yes, they are for sure. Pullbacks in the bigger uptrend. I mean, we're obviously in an uptrend here. But look how far back it pulled right here. It went just a little too far. This pullback did. So how big is this pullback going to be? Is this a valid trade on the short side right here? It will be on the down close. This is the S at 99.50 down to 97.50 is what you're looking at, possibly on the ES. I know it's blue right here, but it's not really the color of it. It's whether you see 4 lines or not. If the ribbon's spread out and you see 4 lines, it doesn't matter that it's blue. Okay, it's really whether you see 4 lines or not. Okay. The Russell didn't end up giving us a trade yet. 94.9. I still have the order on there. 94.9 up to 90. This is low on that exactly. 94.9. Okay. So 94.9 up to 96.9 is what you're looking at on Russell. I think the YM is going to end up going up, even though it stopped us out. I think they're all going to end up going in the direction that they were originally selected to go in, or expected to go in. 99.5 down to 97.5 on the ES right now is what you're looking at, possibly. Okay. And over here on the NQ, well, on the ES right now, we're looking for that to give us a down close and to spread the ribbon out. Right now, you can see it. The ribbon is not really spread out. You can only see 3 lines in a ribbon, but on the down close, I think it would have given us a spread there, but it didn't. So I'm going to cancel the order that I had waiting there on the ES. And on the Russell, we're still waiting for it to move up. Now it's 94.8 is low, so 96.8. We will be buying there. Okay. You see right there on that ES. Looks like it spread it out after all, didn't it? And the Russell's changing here. Let me move this. I didn't get filled on the ES. My order's left standing there. I'm going to cancel that one. Okay. And this Russell, the low on this Russell right now is, I'm looking up here right now. The low on the Russell is 94.6. It's 96.6 is up close. Right there, I would have gotten that. I would have gotten decent profit right there. Probably 4 to 6 ticks profit on this one. The NQ isn't showing us anything right now. Okay. Ian, you would want it to meet. Do you want to set that up with you? We'll have to get a time. So the only trade that we have actually setting up, we missed this one here. I tried to get it on, but it went without me. This one over here, the low is now 93.9. So this 93.9, this should be 95.9. 20 ticks above. Okay, so right now, we stop that and start a new one. All right, so right now on the Russell, we're looking for a dent right here at 95.9, which is 20 ticks above the bottom of this bar. Just popped out of the oversold. The ribbon is spread up, and we're looking for, well, it just did close up. 20 ticks above the bottom of the bar. Well, 19 ticks above the bottom of the bar. So now after 10 ticks in profit from 96.2, it gets up to 97.2. We're going to bump our stop to break even. And we anticipate it's going to get up here to 99.1 at least. Up here to 99.1. Right there. All right. Now, on these 19 tick range charts, my bracket looks like this. Right? I have a 25 stop and 45 target. Now the target can be taken out, can be removed, or extended. But I typically exit my trades with a trailing stop. That means it's approaching the target. This should get all the way up here to this weekly trading zone right now. It should get all the way up to 2105. 2105, that would be quite a bit further than where we are right now. It's a little under 9 points. All right. So we're just waiting on this. We don't have anything else that's triggering here. This look right here that we had, this attempt to push down right here, that was a trade and I did get filled on it, but it didn't put in a lower swing. You see it's turned around, it's gotten back up above the ribbon. So that's turning into some chop right now. It hasn't quite resumed the uptrend. It's turning into some chop right now. It's kind of what happened over here on the YM, also where we stopped out on the YM and we stopped out on all the ones that we stopped out on. It's right here in this transition where it's turning from an uptrend into a little bit of chop as it consolidates and considers whether it's going to continue the uptrend or not. Right, so we're in this Russell trade at a good spot. It's it's a decent spot. If it pulls all the way back down and bounces off the ribbon like it did here and here and here, it's going to stop us out. But I think we're in at a pretty good spot right here. So we just have to wait and see if it pushes up or not from here. Okay. And that's what we're waiting on right now. Does anybody have any questions? What time is it? Oh, it's 1:28 already. Man, the session went really quick. Of course, I was 8 minutes late. Sorry about that. I was in a coma there for 30 minutes. So we're just waiting right now. And I don't see any questions from anyone. So I will go through this one more time. Slide this over here. If you've not taken a free trial with us, go here to mytradingiq.com. Right at mytradingiq.com, click on the purple button right here and sign up for the trial. Now, there's no credit card required for this trial. Once you click on that, it's going to bring you to this registration page. On this page, all we ask for is your first name, your last name, your email, your phone number. There are 5 multiple choice questions and 3 yes or no questions for the most part. Just answer those honestly. Down here at the bottom, if you have Ninja Trader, it gives you Ninja Machine ID, right? Not your Ninja ID. Your Machine ID is a very different thing, right? The Machine ID does not have any hyphens in it, right? It's not 4 number increments. Machine ID is an alphanumeric number that's 26 characters long or something like that. Give us that, all right? It's under the help and about section in Ninja Trader. If you don't have TradingView, I'm going to recommend you go and get TradingView. You can get TradingView for free, or you can get a free trial to TradingView Either one of those, I'm going to recommend you do that. If you want to use our indicators and get the full value of our indicators, do that, because we have more indicators available on TradingView than any other platform. All right, but do that. Give us a TradingView login ID. And that's all you need to do. Once you do that, we'll enable the indicators for you. So have your indicators indicating at the beginning of your trial. Now, I said to go get trading. If you go here to mytradingiq.com, we have trading platforms right here. Just scroll down right here. It says TradingView platform. Watch this video. Click this link. That's all you need to do. Okay, watch the video, click the link, and give us the TradingView login ID. Right. This Russell trade is still going right here. It's struggling to do its job. It is now 1:30. We'll let it go a little bit longer here, but since I was late, we'll run it over a little bit, I guess. I do that to Dwayne, but Dwayne was able to get more done while he was waiting for me to show up. I do apologize for that.
No rush.
But we want to see the Russell trade work itself out here. It should put in a higher swing. That's what we're waiting for. The higher swing here on this Russell trade. And we're still waiting for that higher swing here on the Russell trade. Right. It's almost there. I get the feeling it's going to happen fast, one way or the other. It's going to go all the way up and run up to the swing high, or it's going to run all the way down and stop us out. You see the other ones. This is oversold again right now. This is oversold again right now. So we could have another trade here on the ES, another trade on the NQ while we wait for this Russell trade to happen. We could have other trades on both those markets. They're both set to go up right now. I haven't looked at the YM, but the YM is probably set to go up too. The NQ, yeah. We'll see. It's all consolidating right now. See all the markets, they stopped putting in a higher swing right there. This one did put in a higher swing and it pulled back down. And we ended up with a break even on the last. We stopped out on one of these and we got a break even on one of these. Then we stopped out on the YM trade. So we're still waiting to see what's going to happen with the Russell, but we did end up putting in a higher swing here on the ES. And we put a higher swing in there on the NQ too. So now we're waiting for up closes everywhere. No, except for the YM. Right, there goes the Russell. Starting to get there. It needs to give us 10 ticks in profit to bump the stop to break even. All right, it's going to get to right there to bump the stop to break even. So we're almost there. Almost there. This thing's taking a long time. The NQ's got a trade right here. The ES also has a trade right here. Okay, so here's the NQ trade that just triggered. That needs to go 4 ticks into profit, bump that stop to break even. 4 points into profit. Sorry, I just did. This is, I can't see if it hit 0.2 yet. It doesn't look like it did. We ended up with a break even over there on the NQ. And the ES also has a trade here. The ES had to go up 4 ticks. The NQ 4 points, and I just bumped it to break even. This is not going to break even yet on the Russell. It's still got to get up to this 0.2 right here to bump break even. And then it should get up to here, at least 97.6. That's in tomorrow's lesson plan. We'll get into that tomorrow. But so we're waiting. Right? Did have one trade over here that was a break even. This is a trade here too that went enough into profit to get the stop to break even. This was not a trade over here yet. It needs to put in a higher swing before we can grab another long trade. And there we are. We can go to break even finally on this Russell trade. Man, that took a long time. Right? I'm just going to lock in 1 tick. After all that, I'm not going to get a break even on this. And it should go above 97.6. We're looking for it to get up above the prior swing high here at 99.1. So we're looking for it to get all the way up there. All right, that's what we're looking for on this. Now, this has taken a very long time for this trade to do what it had to do. The ES here is struggling to do what it should do, but it should also make a nice run up above 55.06 and a quarter. 55.06 and a quarter. 55.06 is the high right there. That is not the high of the day. 750 is the high of the day. It should make a run up there right now. The ES should. Okay. It's struggling with the high of the day right there. Okay. I'm just going to go with 5 ticks here on this. All right, we're going to go with 5 ticks on the Russell, and now it should run up right here. There's 10 ticks on the Russell. $15 ticks on the Russell. Now right here is the prior swing high. That's what the minimum that it should do, is get up to that prior swing high. Right, but we're at 15 ticks right now on that Russell trade. And waiting. The NQ over here, that trade that we got to break even. Okay, so we're out with 15 on the Russell trade. Wow, that took a while. Right, the NQ over here, the trade we took over here ended up giving us, it did from my entry point, I'm pretty sure from entry point, it ran four points in a profit, and I bumped the stop to break even, got out of break even. That needs to put in a higher swing. The ES trade is here. That stop is going to break even right now. I know it hit 4 ticks in profit, and there it is at 4 ticks in profit now. Let me bump this over here and lock in 2 ticks on the ES right now. The ES is trying to get up to that number right there. Okay, it may get up there right now. I know I'm running over a little bit, but I was 8 minutes late. So let me run over for 8 minutes, or just take this straight out and see what happens. We got 15 ticks here. We got a break even over there. We just got a couple of ticks here on the ES. All right, so let me just say this before I pass it back to Phoenix, Arizona. All you're looking for is the ribbon to be spread and you come out of the oversold in direction of the ribbon, right? In this case, because we're all looking for long trades on this. When we're looking for short trades, you look for the ribbon to be spread, like right here on the ES a few minutes ago when I missed that trade right there. Looking for the ribbon to be spread, meaning you can see 4 lines in the ribbon, right? The ribbon to be spread and you come out of either the overbought or oversold depending on which direction it's spread. That's it, right? You have to have a higher swing or a lower swing. If you look at the if you go to mytradingiq.com and you look in here in trade rules, step number 1, all trades must come after a higher or lower swing. For the long trades, all the lines must be visible, and they don't have to actually be blue. I can get rid of the end blue. They have to be visible, and the black line in the TV trades trigger must cross above the oversold. For a short trade, all the lines must be visible. They don't have to be red. The black line in the TV trades trigger must cross below the overbought level. That is it. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A in Boca Did I say blue?
TV trades trigger, isn't it blue?
It might be, actually. Yes, it is blue. I'll go and fix that. I'm going to fix that right now. I'll fix those things up and make it the right color. But thank you for pointing that out. And that's it. I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park.
Okie doke. Recap of the morning session.
Okay, today it took 3 minutes and 1 trade to get to $900.
Good job.
Thank you very much.
Okay, let's pick up where we left off. Crude oil. Here's where we opened on crude last night. Below the BBC, we had blue and climbing. Typically will lend support, but price traded down through blue and climbing. And we took out this low here. We didn't take out this low here. But buyers picked the spot and drove us up to the BBC, which we expect to be resistance till proven otherwise. That sent us back down with red and falling to the step line, but we didn't take out this low put in earlier in the session. So we closed above the BBC. Okay. Leg, retracement, up close, and then this candle opened at 66.50. And ran up $500 per contract traded to the weekly zone. Once price hit the zone, that became resistance. So we spent 3 candles or an hour and a half straddling the zone. Then buyers kicked it in again and took us up to 67.58, which just so happens to be almost that low right there. But we've got this in front of it, so we're not really concerned about that. We would have expected price to reach this point. And after the pullback, where we got below the BBC again, and we hit the short target pretty much to the tick. We spiked it a little bit. In fact, we hit the weekly zone at 65.60/65. The low of that candle was 63. So, came right down inside of the zone. Published Monday morning. Just like it did in the same spot yesterday. And when the market finds support, nice bounce. That bounce carried through, got us above the BBC, got us above the weekly trading zone. Now this is a candle, a 30-minute candle that sliced through the weekly zone like it wasn't even there. This is what typically happens. Not every time, but more often than not. When that move runs out of steam, price will retrace back to the zone it sliced through, as it did here, and continue in the direction of the slice, which it did here. Hit the long target and spiked it a little bit right up above that, right there. So now, with this wick sticking up above the long target, I think if price can get back below the step line, we'll see a retracement to support times 2. Got 30-minute BBC and blue and climbing, and you got the zone right there. So, I mean, if price just dropped like a rock right now, you'd have support times 3. But by the time price works its way back here, if that's what it's going to do, then this scenario will change just a little bit. But any one of these 3 individually is potential support. The zone, the BBC, and blue and climbing. Okay, and when they're clumped together like that, that's support times 3. Gold. Yeah, this is the window of opportunity we drew yesterday live on the broadcast. Didn't close. The window of opportunity didn't fill. And it filled beautifully off the econ news this morning at 8:30. In fact, it took us down to zone. Yep, the zone's 30/31, and the low there's 30.7. So support bounces us up to resistance, back to support, back to resistance. Now we hit the BBC and the pullback held, but we did spike up to touch the long target and the bearish cross. Right there where the red line gets below the green line, that's a bearish cross. When you have a bearish cross that leads to an extended move, first time price revisits that area. Will almost always be good resistance. Every time, no. More often than not, yes. And so that resistance has now sent the market looking for support. And it may find it at blue and climbing. If not, then we could revisit the short target. And there's potential support there. And then you're back at the zone. If the market finds support at blue and climbing and manages to get back above the BBC, then you've got a little opportunity here. 47 to 48. That's enough to get your goal for the day. And if it's got that much gusto, there's a good chance it might. Remember, the first time up, you expect resistance. But the second time up could clear it and take us all the way to the zone at 51/52. Silver. Here's where we open. Drop to the BBC. The pullback held. Spiked it, but it held. And that sent us right up to the long target. Resistance. Based off yesterday's high. Resistance sends us back to support. Support sends us looking for resistance. We overshot the zone by a little bit. Then we consolidated as we normally do. That allowed blue and climbing to get directly above price on its way to red and falling. And that's what it took to get us all the way down to this area of support right here. See this low? See this low? That's market structure. So then we bounced back up to here. Then this candle opened, and we spiked the BBC on the upside. And then we came all the way back down, bounced again, and then here comes the big drop. Started at 9:30 and continued into 10 o'clock candle, all the way down to the short target. We spiked the short target, spiked the zone, and this low right here, there you go. Wednesday, Tuesday, Monday. That's market structure. Now we're above the BBC. The step line's kind of right on top of price, but if that candle turns green, we could get a move up from 28.97 to 99. That's 2 pennies. That's enough to get your goal for the day. And then potential resistance here and here. Those are so close together, I wouldn't mess with that. If you take out this high, just you control your stop. And if we take out this high, we should see the weekly zone. On the euro, price below the BBC drops to the weekly zone, to the tick, 185/190. Support sends us all the way up to the long target. So we get a leg and a retracement. Pull back to blue and climbing, held. They gave us another leg. We almost touched the zone. We needed another retracement, and then another attempt, and then another retracement where the pullback held. Then we ran into red and falling resistance, which pushed us back down to the BBC, which once again held. And this time it took us all the way to the zone. 555/560. Actually spiked up to 75. And right now, the step line has crossed red and falling. Price, when the step line crosses red and falling, you should expect a retracement to the BBC. When the step line crosses blue and climbing, you should expect a retracement to the BBC. That happens over and over again and again. So the big question is now, price makes it up to the BBC, which we expect to be resistance till proven otherwise. Keep in mind, you got a bearish cross right overhead, potential resistance. And if price gets above the BBC, you can already see red and falling starting to curl. It's directly below price. Once that turns to blue and climbing, that's additional support and increases the probability that price will in fact trade above the BBC up to this bearish cross and to the long target. So there you have it. Now we had a move down. We finally have taken out Friday's high. Friday's high was 32.5. Today's high there's a wick up in there that you can't see because of the step line. So the high Friday, September 6th, the high was 32.5. Today's high, 1975. So we've still got a ways to go. And the daily VBC is sitting right now, 55.36. So again, expect that to be resistance. Right above that's the 24% fib retracement. And then right above that's the 24% fib extension. All three which could act as good resistance. If we find resistance anywhere in this area, then look for a leg back to the downside, and this will have all been just one big head fake. To become a member, go to mytradingiq.com. If you have questions on how to actually join, what it entails, what you get, call 949-42-EMINI. Send an email to support@cfrn.net. When you become a passport holder, you'll have 2 hours of live training in an interactive environment every trading day. That puts you way ahead of the 9 out of 10 new traders who fail because they don't have a teacher, especially not 2 hours a day every trading day. Along with 2 hours of group training in an interactive environment, get private one-on-one mentoring, strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETFs. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. When you become a passport holder, you'll get the Logic 247 alerts around the clock as they're published. And as of today's recap, we're sitting at 11% stopped out for the week so far. Today's only Wednesday. The average over the last 319 weeks, 17,800 alerts, is 20% or less on a weekly basis. You'll also get the concierge trade alerts every evening when the report is published. You get the weekly trading zones Monday morning, 6:15 a.m. Eastern, closing in on our 15-year anniversary. We launched the weekly trading zones December 14th of 2009. And you'll be able to attend the members-only workshop tomorrow night. So if you've been on the trial for the past week, then you should get an email today, probably tomorrow as well, with specific instructions on how you can become a member of our family. And that's how we treat one another, like family. Trading can be a very lonely business, but it doesn't have to be. Trading's not easy, but it can be simple. When you're part of a community of traders who aren't stabbing you in the back, but are supporting you and encouraging you and helping you, that's a whole different experience. Most people, the only experience they have with trading and investing chat rooms is people calling each other names and everybody's trying to outdo the next guy. I'm better than you are, blah, blah, blah. Yeah. We have a garbage-free environment, okay? Everybody gets treated with dignity and with respect. It's everything a trader needs, all under one roof, one low price. To wrap it up, yesterday, our good word for the day was change your thinking, change your life. Part 1. Today's part 2. Proverbs 13:20. He who walks with wise men will be wise. You know, there's a very popular book out there. I'm trying to remember the name of it and the author. But basically, 5 people you spend the most time around: home, work, school, at play. You'll become those 5 people. You're like a sponge. You absorb the people around you. In fact, you have to check yourself sometimes, because you start picking up on their mannerisms, okay? And that can be awkward and embarrassing. Or they may have a certain way of talking, or they may have a certain accent, okay? Like when you visit the Deep South, it's very difficult not to develop a Southern accent. Michael has managed not to, but if he stays there long enough, it'll come. In fact, it didn't go over so well when our vice president started trying to talk hillbilly at some of her rallies. But I guess people are quick to forgive and forget. I guess that's a good thing, right? If you are surrounded by negativity, look for a better environment. I mean, that just makes sense, right? If you're trying to stop drinking, where's the one place you don't want to go to watch the ball game? In a bar, right? If you're trying to stop overeating because you're obese, like 40% of Americans, where should you not hang out? Well, probably at the bakery. I don't know. Advertising executive Charlie Brower said, "A new idea is delicate. It can be killed by a sneer or a yawn. It can be stabbed to death by a quip, and worried to death by a frown on the right man's brow." Negative environments kill great ideas every minute. A creative environment, on the other hand, becomes like a greenhouse where ideas are seeded and sprout and thrive. In order to grow, you must seek out people who are committed to personal growth. Such people encourage creativity. That's number 1. When innovation and good thinking are openly encouraged and rewarded, people see they have permission to be creative. Freedom to be creative encourages people to stay engaged in a task regardless of its challenges. Number 2, people are willing to risk failure. And we're talking about seeking out people who are committed to personal growth. So the type of people you're looking for: number 1, encourage creativity. Number 2, they're willing to risk failure. Even when you have studied and prepared yourself thoroughly, you'll have to try several times before you succeed. We all know the story of Thomas Edison, and he discovered, I don't know, like hundreds of ways that an electric light bulb wouldn't work, until he finally stumbled onto the way it would work. And I'm sure that that has happened with many other inventions throughout the ages. You cannot fear failure. When you fail, what do? Get back up again. Or you can just lay there and, well, I guess that makes you a failure. Not what you want to be, not the kind of people you want to hang out with. You need to be in an environment where mistakes are viewed as part of the creative process. Number 3, you want to hang out with people who believe in the potential of a dream. A creative environment encourages the use of a blank sheet of paper and this question: if you could draw a picture of what you want to accomplish, what would it look like? A creative environment allowed Dr. Martin Luther King Jr. to speak with passion and declare, "I have a dream," not "I have a goal." Think about that. One of the most famous speeches, at least in our lifetime, began with, "I have a dream," not "I have a goal." Which ties in pretty well to our daily devotional at the start of each broadcast, which last week, this week, and next week is God's dream for your life. So Dr. King said, "I have a dream, not I have a goal." Goals may give focus, but dreams have power. Dreams expand your world. And God is the giver of dreams and visions. Read about it in Joel 2:28. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this: there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.